So, if you've been keeping an eye on the price of gold lately, you've probably noticed it's been dipping, and you might be scratching your head wondering what's going on. It seems complicated, right? But the answer is actually a really fascinating tug of war between two massive economic forces. And today, we're going to untangle exactly what those forces are, and more importantly, who's winning. It really all comes down to this simple question that a lot of us are asking right now. Hey, why is the price of gold dropping? And you know what? It's a fantastic question, and the answer is surprisingly simple once you see the whole picture. The key to understanding what's happening with gold's price is to just picture a giant game of tug of war. Seriously, it's not about a dozen different confusing factors. It's really just two primary, powerful forces pulling in completely opposite directions. So let's go ahead and meet the contenders. All right, so here are our two teams. On one side of the rope, you've got the forces that are constantly trying to push the price of gold up. And on the other side, you've got the forces pulling it down. Let's break down each team, figure out who their star player is, and see who's really winning this match right at this moment. First up, let's talk about the team trying to push that price higher. Their most powerful player, by a long shot, is the world's central banks. These guys are a steady, long-term force that consistently props up the price of gold. But how exactly do they do that? Well, it's a pretty straightforward three-step play rooted in basic economics. First, central banks all over the world are buying up massive amounts of gold for their reserves. They do this to have a safe haven asset or to diversify away from other currencies. This creates a huge consistent demand. And of course, what happens when demand for something goes way up? Its price tends to follow. This creates this slow but very steady upward pressure on gold's price over the long run. Okay, but wait, if central banks are always buying, why is the price dropping? That's a great question, and it brings us to the other side of the rope, the team that's pulling the price down. And right now, their star player is an absolute powerhouse, the strong US dollar. This whole downward pull works kind of like a chain reaction, like a set of financial dominoes. It all kicks off with high interest rates over in the United States. This, in turn, makes the US dollar stronger. And a strong dollar, almost without fail, leads to a weaker gold price. It's a pattern you see time and time again in finance. But that's the real million-dollar question, isn't it? Why does that happen? Why is there this inverse relationship? I mean, why can't a strong dollar and strong gold exist at the same time? Well, it really boils down to two main reasons that affect everyone from big-time investors to regular buyers across the globe. So two main things are going on here. First, just think about it from an investor's perspective. When U.S. interest rates are high, super safe investments like government bonds or FDs are offering really attractive returns. Gold, on the other hand, doesn't pay you any interest to hold it. So logically, a lot of money starts flowing out of gold and into these other assets that actually pay you. The second reason is all about global pricing. You see, gold is traded in US dollars. So when the dollar gets stronger, it suddenly becomes way more expensive for anyone holding another currency, like euros or yen or rupees, to buy the exact same amount of gold. This price hike naturally cools off demand from around the world. Okay, so we've met the two teams. We've got Team Push Up, captained by the central banks who are in it for the long haul. And then we've got Team Pull Down, led by high interest rates and the super strong US dollar. The crucial question is, who has the upper hand in this match at this very moment? And the answer, right now, is crystal clear. The immediate and powerful force of the strong dollar is just plain overpowering the slow, steady buying from the central banks. The short-term pull is simply stronger than the long-term push, and that is why we are seeing the price of gold drop. This quote just nails it. It basically translates to, look, the logic is simple. Even though central banks are buying and pushing the price up, the high U.S. interest rates and the strong dollar are pulling the price of gold down. At the end of the day, it's really that simple a conflict. And that leaves us with a really fascinating question to think about for the future. We know the strong dollar team is winning right now, but what could happen in the world economy? A major crisis, a big shift in policy that might cause the central banks to suddenly ramp up their buying and start winning this tug of war. That's the thing we'll all be watching for.